You might want to watch the video all the way through. Next week is a very important week as we're forming these divergences. Next week we're going to get Powell's two-day testimony before Congress on Tuesday and Wednesday during the market session. Thursday we'll get the CPI data. Friday we'll get the PPI inflation data. 2 days of inflation on Thursday and Friday. 2 days of testimony with Powell on Tuesday and Wednesday. These divergences continue to loom over the charts here in the weekly time frame, and you got it on the awesome oscillator. I covered it last time, the awesome oscillator. I've talked about it here on the RSI. I've talked about it here on indicators. It's all over the place. MACD, nasdaq, you got it on the S&P. You got that divergence going on now. Apple on the daily time frame, just like nasdaq. You'll see the chart, and it is highly probable that this divergence is going to lead to a reversal, as this one did over here and as this one did over here. We floated higher on very light volume. It is highly likely that one of the events or a combination of things will create some kind of sell-off next week. Drift a little bit higher. As I keep saying, until the divergences are done on the awesome oscillator daily time frame, S&P can go higher. My signals remain bullish, but these divergences, once the negative divergence is complete on the awesome oscillator daily time frame, covered it in great length and detail in my last update, likely going to see the reversal begin here with these divergences in the weekly time frame and on the monthly time frame, which I'll show you in just a little bit. It'll be a big week next week. With our short trading week, we did get the jobs report on Friday. Again, very light volume. The market hit new highs. Came in at over than expected on the 200,000 that were expected, 206. But before I go on, let me just say this. Again, we get this game with the Labor Department. Every single month they overestimate. Nearly every single month they overestimate the amount of jobs, and then they quietly revise it down later when no one's looking, and then you get another revision later on beyond that. I mean, it's ridiculous. They're giving us fake numbers, make things look better than they really are. That's what they're doing. Now take this number that we just got, 218,000. This is the number revised down. It'll probably be even revised down further. I'll show you what happened. But we have the unemployment rate tick up. It was supposed to come in at 4%, 4.1%, and previously it was at 4%. So we're seeing the unemployment rate begin to tick up. It's going to tick up. You're going to see job losses. Even with the fake numbers we're getting, not going to be able to hide it, and you'll probably see the job losses here start showing up very, very soon. But more about the revisions. I talk about it every single month. You know it because I explain it and I talk about it. People just look at the headline number and go, oh, yay. Real strong jobs report last month. Well, it got revised down, and the previous month it got revised down yet again. The 218,000 was at 272,000. Okay, they revised it all the way down from 272 down to 218. And then they did another revision on the April number and dropped that from 165 down to 108. Actually, we're going to get negative numbers, and they'll try to put lipstick on a pig and make it look better. You're still going to see that we're going to end up with negative numbers before all is said and done as we move towards recession. Seeing the unemployment rate start to tick back up, another huge warning sign. We're actually getting weaker numbers. This is now down to 108,000 for the April number. The number was sharply revised lower. It'll probably get another revision down before all is said and done. These are just games going on. People reporting fake numbers make things look better than they are. And that's really what it comes down to. But actually read the jobs report and look at this data, see what's going on. That's why I'm sharing it with you, is because I continue to see the Labor Department way overestimate the initial number and sharply revised down lower later. They're completely incompetent, or they're doing it on purpose. Make the things look better than they are. Just quickly, with these two revisions with May and April, the amount of jobs created has been revised lower by 111,000. Seeing the long-term unemployment increase 166,000 by 166,000 with this last report. And again, that's up 40% from last year. They're creating this illusion that there are more jobs being created than there are actually being created. And by the way, the jobs that were created, the government is going on a crazy hiring spree right now. It's government jobs. Over 70,000 of it was government jobs. That's triple the amount from the previous report. Amount of government jobs created. So again, just crazy stuff going on here with the tweaking of these numbers. Numbers are so fake. Back to the economic calendar. Next week, we're going to get Fed Chair Powell's testimony before Congress. We're going to get the CPI data and the PPI data. It's going to be a busy week. And again, the following Monday from this coming Monday on July 8th, we'll get Fed Powell speaking again. This testimony is going to be huge. Again, it's likely that we're going to see the divergences begin to sell off with Fed Powell's testimony or the inflation data or maybe both. Now, let me just say this. Sometimes there's an up day with Powell's testimony and then a down day. When you get the Fed days, you get the market going higher with with one or the other, with the statement or with Powell, a sell off with the other. And again, oftentimes it's you get some volatility with the statement and then a rally with Powell or vice versa. Again, you're going to get 2 days of testimony. Powell's going to be testifying before the Senate on Tuesday during the market session, and then he'll be testifying before the House on Wednesday. Again, this is 10 a.m. Eastern time. Again, I think you're going to see the market begin to, some of these divergences begin to play out. And again, maybe start a larger reversal. After Fed Chair Powell wraps up his 2 days of testimony, we're going to get the CPI on July 11th next week. We're going to get the CPI, and again, it could be a market mover. The year-over-year headline is supposed to come in the same at 3.4, and the core, I should say, 3.4. The headline year-over-year is supposed to come in cooler at 3.1. The month-over-month is supposed to be relatively tame. And on Friday, we'll get the producer price index, which is the wholesale inflation. So you've got every single day except for Monday something major going on. Tuesday and Wednesday, Powell's testimony. Then Thursday and Friday, you've got all the inflation data. Could be Mr. Toad's wild ride next week. We still may not be finished with the divergences on the awesome oscillators in the daily time frame, as I talked about in my last update. Finish that at some point next week, as I talked about in my last video earlier in the week. Once we finish those divergences on the awesome oscillator, probably begin to see the divergences in the weekly time frame begin to play out. I think that Fed Chair Powell and the inflation data could be major market movers going into next week. Complete a short-term top if we form a divergence on the 60-minute chart of the RSI, which I talked to about my last video, or a major top turn if we start turning. Those divergences begin to play out in the weekly time frame. We have major divergences in the monthly time frame as well. I'm going to continue to point out that we've come right up with the rally this week. We were just below it for this week's rally, right below that trend line in the monthly time frame. We're rallying right up into it. The long-term trend line there in the monthly time frame. This goes back to the 2000 top connected with the 2022 top. And we're slamming right up into it with the negative diversions in the monthly time frame. Multiple points of negative diversions will likely lead to a reversal. The negative diversions on the MACD, by the time this rolls over, you'll already have a significant drop. We have NASDAQ making new highs there on Friday. The NVIDIA daily chart is not moving to a new high. It got this reversal bar turned down. Tried to bounce around the 20-period moving average here. The 10 crossed the 20, and now we're forming this bear flag. So again, I told you, again, we might try to go up and fill this gap on a closing basis. We already did it on an intraday basis, so we don't have to, but you're forming a bear flag, and if we start selling off with NVIDIA, it can drag the whole market down, and if the downward resolution is below this trend line right here, then again, rather than a bigger rebound or a test to a new high, then again, start moving back towards a 50, towards a 100, towards some of these gap fills over here. It could drag down the whole market with it. Pretty soon we're going to be getting some bank earnings here. Banks, again, it'll be important to watch that. Something I'm paying attention to, that NASDAQ now is moving its to new highs. NVIDIA is not. It was still up $2.29 for the week. It was up 1.85% for the week, but it's still forming that bear flag. We had that candle of indecision last week. You get another one this week. You got back-to-back candles of indecision. The doji followed by the spinning top, forming a bear flag in the daily. The negative divergence is present. You also have it down here on the stochastic. And this week we're now breaking the 80 level on the stochastic. So it's just something we're paying attention to. Again, we're saying about AI exactly what they said with the with the tech bubble, with the dot-com stocks back in 2000, the exact same thing. Weekly and daily chart of NVIDIA. NASDAQ was helped out by Apple, and Apple was up sharply for the week, again, forming negative divergences on the RSI and down here on the MACD, looking very similar to the NASDAQ actually. It's a bullish divergence that gave us this rally. It was a bearish divergence that gave us this sell-off over here, bullish divergence back over here. So this one's probably going to produce another sell-off with Apple. The divergences have been playing out very nicely with Apple back and forth. See the same divergences down on the MACD. Again, our current one, which I just mentioned, and then again, the bottom over here with the MACD, the top over here with the rising wedge, and then the bullish wedge down here. Again, a bullish, triple bullish divergence over and over. The divergences have been playing out with Apple. It helped the NASDAQ, even though NVIDIA couldn't make new highs. It was still up for the week, but Apple was up sharply for the week. That helped NASDAQ and S&P 500. Still can't make new highs, as I talked about my last update, and it's also forming a bear flag like NVIDIA, the 78.6 Fibonacci. That video at the end of this one. You just have some red flags going on here. You've got a divergence that's developing on Apple, as well as the NASDAQ and S&P 500. Well, NVIDIA hasn't been able to make new highs. NASDAQ is. That's a huge red flag. The fact that Apple's forming a divergence, another huge red flag. Bitcoin is diverging with the stock market, another huge red flag. The fact that the Dow is making a lower high, at least so far, we had this double top. NASDAQ's making a higher high. The Dow and the NASDAQ are diverging. The S&P and the Russells, I talked about in my last video, are diverging. It happens at turning points. NASDAQ daily chart looks very similar to the Apple daily chart with the divergence that's developing on the RSI and the MACD. It looks very, very similar. And again, the NASDAQ was helped this week, very light volume, by Apple, not by NVIDIA. That's just kind of drifting sideways. Yeah, we had a strong day on Wednesday for NVIDIA before the 4th of July Independence Day holiday. Advancing on declining volume. We're hitting this upper end of the channel, forming these divergences. And you know what? I talked about the weekly charts. I showed you the weekly chart on NASDAQ with the awesome oscillator, but I forgot to show you the weekly chart. And it is hitting this trend line, but it's throwing our rising wedge a little bit. Sometimes you do get overthrows with those. Quickly, I've been talking about the NASDAQ moving up to this upper channel line. I talked about this in my last video. I didn't show you the weekly chart except for the awesome oscillator. I'll show it to you right now. But we're hitting this trend line. I've been talking about different trend lines. You got a nice looking channel here. But look at Pring parameters forming this negative divergence here, very similar to what we're getting in the daily time frame. Well, NASDAQ's become very overbought on the 60-minute chart with the RSI. Again, it's either going to form a little divergence here or a confirmation of a lower high. You get these little miniature head and shoulder patterns that I've talked about. If we start heading back down here, you know, we've got these little miniature ones on the intraday charts. If, in fact, that pattern ends up setting up, we'll be watching. Again, we're floating higher on extremely light volume. But I wanted to show you the weekly chart given what's going on with Apple making that divergence. I want to show you the weekly chart on NASDAQ 100. Got to do it in my last video. While we get the Apple divergence going on in the daily time frame, we've got the lower high on NVIDIA. This is our log scaling. We had an overthrow of this level right here. We got those back-to-back, doji spinning top-looking candlesticks. The first one was a doji. The second one, spinning top-looking candlestick. They were not confirmed. Again, confirmation is everything. And again, I told you if we didn't see them confirmed, we'd be watching that upper trend line on the 60-minute chart. That's giving us a slight overthrow here with the log scaling. Based on excluding the shadows right here and just connecting it with this peak. Again, trend lines change all the time. Sometimes with rising wedges, you do get an overthrow. S&P has the same pattern so far. It is not overthrowing. It's just under the rising wedge. But this week, going higher. I told you there could be market manipulation easily this week because of the light trading volume surrounding the holiday. The price, NASDAQ, sharply higher. on light volume NASDAQ here, and again on our short trading holiday week. We've got all these divergences going on with the MACD as I talked about. The last update showed you the awesome oscillator for red bars. Sorry, my voice is a little hoarse after celebrating Independence Day with family. I apologize for that. I've talked to you about all the divergences in the weekly time frame and the daily time frame that are now setting up, market breadth indicators, things like that. The line is making a series of lower highs. The S&P is making a series of higher highs. But I've also talked to you about Bitcoin. And I think Bitcoin is a huge red flag because there's been a short-term decoupling. They have a long-term positive correlation, but sometimes they start decoupling, and oftentimes divergences between them when there's this short-term decoupling, it ends up leading to reversals in the market, and it happens over and over and over again. There are more. Both peaked in March. P down here peaked in March, turned down, dropped about 6%. Bitcoin peaked and it dropped almost 23.5%. Okay, and then it attempted to rebound. S&P attempted to rebound. S&P went and made a new high. Bitcoin made a lower high. And that's where we're at right now. And very, very similar to the top over here in 2022 for the S&P. The S&P was rallying up to new highs. Bitcoin peaked in November of 2021. It made a lower high, got a feeble rebound after a significant drop, which is what we just had right now. I mean, we've dropped from the peak 27.5%. 25% in the most recent price action. From the peak in March, we were down 27.5%. But Bitcoin made a feeble rebound surrounding the 200 period, which is where we're at right now. Tried to get back above it and it failed. And then you got a much bigger drop until you got another rebound back up to the 200 that was followed by another 68% drop. After the 52% drop from this peak, we rebounded, and from the lower high, another 68% lower. Ended up dropping 78% from the top. In a series of declines, while the S&P dropped 27.5%. They have a positive correlation more often than not, but when turning points happen, more often than not, there is a divergence present, and that's what we have right now. Now, Bitcoin may just get a feeble rally back up, get out the 20-week. S&P is probably going to go take it out. Taking out the 100-day and the daily, S&P is probably going to go take it out. Back to the horizontal support line. We've got the possible head and shoulders. This is probably where S&P is headed, towards 4,900, NASDAQ towards 17,000. Both of them have head and shoulders. Bitcoin got a little McDonald's pattern, a double M pattern there. And again, it's probably Bitcoin is right now forming a bullish divergence. I expect Bitcoin's probably going to get some kind of short-term bottom. Whether a feeble rebound back up or whether a powerful rebound back up to the 100 period, I don't know. But as long as we remain below the 100 period, well, that's bearish for Bitcoin, and S&P could be following Bitcoin's lead as it did over here. When Bitcoin peaked in November, it collapsed and it had a feeble rebound, and S&P and NASDAQ could be following Bitcoin's lead. I talked about theory that, again, this divergence has formed. Bitcoin has taken over leadership now, and the leadership is now lower if the signals remain bearish on Bitcoin. Now, if we start getting back above the 100, back above the 20-week, and staying above them, you got to have staying power, then maybe something else is going on. The dollar collapses. But I've got all kinds of bearish signals in the weekly and the daily time frame for Bitcoin. S&P and NASDAQ could be right behind with these divergences. And just look at some of these. Again, going back over here to the 2017 top for Bitcoin. Bitcoin peaked. It dropped 84%, entered a bear market. While we had major corrections for the S&P and the NASDAQ, we had two major sell-offs in 2018. Well, Bitcoin dropped 84%. And again, then we had the Fed come in. They were raising rates and they said, oh, we're just kidding. And they reversed themselves and we had the rebound back up. Again, look here on the rebound after the bear market for Bitcoin. Look at this. Bitcoin went up here, had this big rebound back up. Again, at that peak, and I left this out right here at the 20 peak in 2018. They also diverged before they got that big drop. A little harder to see here because this is the linear scaling, not the log scaling. But a little harder to see that sharp drop on Bitcoin, and you can see the sharp drop down here on the S&P 500 of 20%. They both rebounded. Bitcoin peaked. They formed another little divergence right here, and Bitcoin turned down, and the S&P went higher, and they formed another divergence at the 2020 top, a little one there, and a larger one with the previous peak. And then we had that 35% drop with S&P. We had a 71% drop with Bitcoin. They both recovered, and again, actually, we moved to new highs with both of them. And at the top again, we peaked in November of 2021 with Bitcoin. It got a lower high there. When the S&P was peaking in January, it had already begun to sell off, exactly what it's doing now. Got a feeble rebound back up, and then the bottom fell out of Bitcoin over the rest of the year. S&P had that 27.5% sell-off. NASDAQ 37.5% sell-off. So again, just the divergences that are forming, pretty interesting. Now, again, S&P is still forming divergences on the awesome oscillator, so is NASDAQ in the daily time frame. Could be when those divergences finish, we start seeing it follow Bitcoin lower. You get those green bars on the awesome oscillator that I was looking for. I talk about it in my last video. I'll link it at the end of this video if you want to see what I'm talking about. Those divergences complete, I think you're going to see the S&P begin to follow Bitcoin as it did back over here and as it did at some of these other turns that I talked about. Sometimes you even get bullish divergences where they, the S&P moved to a lower low here. Bitcoin got a higher low after the bear market. Times you get these bullish divergences between the two. Other times you get these bearish divergences at turning points. It doesn't always form, but many, many times it does. Bitcoin giving us a warning sign that the S&P 500 and NASDAQ are about to follow. And again, you don't have to like Bitcoin. And I hope I'm not boring you with talking about Bitcoin. This is important because I think Bitcoin is sending a huge message. Talked about in my last video, Bitcoin's forming a bullish divergence right now, while the S&P is forming a bearish divergence along with NASDAQ. Again, I don't want to bore you with Bitcoin. If you don't like it, that's fine, but the divergence forming on Bitcoin, it's forming bullish divergences. I'm getting bottoming signals for Bitcoin after we got the lower high for Bitcoin over here. The lower high, all my signals began to turn bearish. Again, we still have red reflecting the trend, but you're getting a bullish divergence down here with momentum, and you're getting bottoming signals that are forming over here. The signals were predicting a bounce. Now I'm getting signals that are suggesting we might be forming a bottom with Bitcoin, and I predicted we were going to go down beyond that 200 period, beyond this low right here, and get a lower high, lower low with going down to that 200 period. Everybody was thinking, oh, this is the bottom, and not. And we got this drop. So I think we're bottoming, and I think this bullish divergence is going to give us a rebound. The question is it just going to be a feeble rebound back up, like after the peak there in 2021 and the sell-off and diverging with the S&P 500? Bitcoin only got a feeble rebound. It rallied. I mean, we've had a significant sell-off of 27.5% since the high over here of this decline. But and over here, you've got 25%. But Bitcoin made a lower high. Well, S&P made a higher high. They diverge. I think Bitcoin's going to go up and set up a lower high, and I think S&P is going to come down and play catch up to Bitcoin. But it's interesting. The S&P is forming which you'll see, it's forming a bearish divergence, while Bitcoin's forming a bullish divergence, and I think that's a huge warning sign. Don't think the stock market could go down? Just ask the crypto people up here and back over here. They didn't think this was going to happen. Bitcoin lost over here 23.5%. Over here, again, 25% from the high, 27.5%. Nobody believed it was possible, and everybody said, we're going to 100,000. And it turned down, and now all the signals are bearish. I think you're going to flip back here to bullish pretty quick. My signals are still bearish, but I think they're going to flip back. Got a good shot, but we only get a lower high because now you're getting a divergence with the S&P 500, and you've got major negative divergences in the weekly time frame. Bitcoin confirmed lower highs. Now you have a lower high, lower low with Bitcoin. Bulls have their work cut out for them with Bitcoin. They got to get back above the 100 period moving average, which is the pink line. And again, I don't mean to bore you with cryptocurrency, with Bitcoin, but I'm just telling you this is a huge red flag for the stock market, just like the Apple divergence, just like the fact that at least so far, Nvidia is not moving to a new high, while the S&P and NASDAQ are. And again, the divergences between NASDAQ and the Dow and S&P 500 and the Russell and so on and so on. Again, I think Bitcoin's going to form a bottom. It could still go lower, but I am getting warning signs here that we're trying to form a bottom. with this little bullish signal right here, this bullish signal that wasn't present over here with the momentum signals. It is now. We'll see if Bitcoin tries to bottom. If it does it make a lower high as the S&P plays catch up? See more of my Bitcoin charts. I'll link my latest Bitcoin video at the end of this video. By the way, we're now seeing the Bitcoin weekly signals turn bearish. It closes on Sunday. I'll be watching that close. Next Bitcoin video, I'll be talking about the Bitcoin weekly signals. Now I'll begin to turn bearish. That is going to be a very, very problematic situation for Bitcoin and eventually the stock market, because the stock market follows Bitcoin's lead. When Bitcoin peaked and reversed in 2021, collapsed, the S&P followed shortly thereafter and formed that divergence, which is what we have present right now. Bitcoin made a lower high in May and June. S&P rallied up here, continuing to rally in May and June to our July peak, at least so far. If you are completely tired of hearing about Bitcoin and its correlation with the S&P, this is the last chart, so you can rest assured I will not be talking anymore in this video about Bitcoin. Some people love it, other people hate it. Again, I find the correlations between the two fascinating. I like the stock market and I like Bitcoin. All kinds of sell signals on Bitcoin, and look at momentum is validating it now. Going into the negative region, Bitcoin recently lost the 20-week moving average. And now we're getting all kinds of sell signals. They won't be finalized until Sunday's close, but I'm just telling you, if we start seeing these sell signals with, and again, let me be clear, I think Bitcoin's going to bounce. It's become very oversold. And I think it's going to resume the decline, much like it did over here. Over here, it got a feeble bounce in the weekly time frame. Signals turned bearish, and then it ended up, dropping even further before we got any kind of meaningful rebound. And with the downturn, again, momentum went negative and remained there through the decline until we got the reversal right there. And right now, we're going into negative territory. And we're getting the reversal signals in the weekly time frame on Bitcoin. And we're getting signals of topping signals here in the weekly time frame. I'm just telling you, this is a huge red flag for the stock market if Bitcoin gets the weekly signals turning bearish by the end of the week or maybe next week. But right now, they are looking like they're going to close, many of them, with sell signals. And maybe we dodge that bullet with the rebound. Again, I've been predicting that we'll rebound back above the 200-period moving average. Move back above the 200 period over time here. Maybe we dodge that bullet for a little while, but this is a huge warning sign. And right now, you are attempting to go negative with momentum. This is really a huge red flag for the stock market. So just to let you know, a lot of weekly different signals that really do a good job. And again, many of them are turning bearish now. I want to see those signals. I'll likely do that in my next Bitcoin update, which will be either Sunday, the Sunday close, or on into Monday, depending on when I get a chance to do my Bitcoin video. I'm not going to bore you with Bitcoin anymore. Again, I think it's forming a short-term bottom. I think it'll bounce. I'll be watching the weekly closes, but there are huge red flags, the divergence between S&P and Bitcoin, and then these topping signals in the weekly time frame, and the fact that we had all those sell signals back at the June peak while the S&P and NASDAQ rallied higher. Huge red flag. Let's compare apples and apples. We got a bullish divergence going on here with Bitcoin. Let's take a look at the S&P 500. And by the way, if the S&P loses this line right here, which represents the swing move as Bitcoin did, along with my other trend signals, then that's going to be very bearish. Bitcoin may try to rally back eventually up to that. Again, the bottom may not be quite in. Again, it may take a little bit more time, but just compare. Here you got a bullish divergence, and this is why I've been predicting lower levels for Bitcoin. I thought it would form that. Look at the S&P. Now let's just look at SPY first, the ETF for the S&P 500, SPY. It's getting more sell signals here. We've had a couple of sell signals. Momentum started to turn, and then it turned right back up. Getting a risk that a top could be developing here. And again, while Bitcoin's forming a bullish divergence, look what's happening. We're forming negative divergence right here. So again, that short-term decoupling between the two may be a huge red flag that the S&P is about to join Bitcoin and head back towards its horizontal support level. again, forming, rather than a double top like Bitcoin, a possible head and shoulders pattern as we go throughout the summer here. But I want to remind you, my signals for the S&P remain bullish. Momentum tried to flip, but it couldn't do it. It turned back up, and we floated higher on very, very light volume with the Independence Day holiday short trading week this week. Watching, and again, we're just below that trend line. I talked about it in great length and detail in my last update. Weekly chart, I showed it to you on the daily chart. We're just right below it, below the upper channel line. I'll be watching to see if we start to turn. We've got a boatload trend lines that we're about to slam into, and NASDAQ is already hitting on the 60-minute chart. So I'll be watching this. Start seeing momentum start to flip like it did over here. We started getting some warning signs, and then it flipped. Once we got the divergence right there, we went 3 points higher. Again, we've got the divergence right here. So again, could see momentum try to turn. Don't forget the RSIs have become very, very overbought on those 60-minute charts. We could turn and still form a divergence on those 60-minute charts. Again, right now my signals remain bullish, but I'm just telling you there's huge warning signs. Look at those weekly charts. I talked about my last update, but Bitcoin getting the bullish divergence, S&P getting the bearish divergence. Maybe the S&P starts to play catch-up like it did back in January of 2022. I wouldn't be surprised. Bitcoin form a bottom and rebound, and S&P start to sell off sharply as that short-term decoupling begins to play out. And eventually, they'll both move in lockstep together. If Bitcoin has topped, could be down, but usually the asset that has the most volatility tops first, which is what we've seen with Bitcoin. The same divergence is going on here with the S&P 500 in the daily time frame. The S&P cash, not quite the same signals. We had another little sell signal over here with the S&P SPY ETF, and we got a little topping. And again, there are slight differences. You have the slight differences between them due to the dividend. Sometimes there are short little discrepancies between the two, but and you can see that with those signals. But again, momentum tried to turn bearish briefly for a day and turned right back up. And again, we got more warning signals on the NASDAQ, but I want to show you the SPY chart because of that. Talk to you about the equal weight, my last couple of updates. And again, the equal weight, it's made a lower high. Well, the S&P has made a higher high, and they're diverging from one another. Huge red flag. The equal weight is now losing the 100-day moving average. And again, the signals have already turned bearish. The topping signals for the lower high and the peak over here, they've already turned bearish. Now see this little gray area? This is telling us something is about to happen. Something is about to happen. And again, we're starting to drift lower now. And again, even this week, the S&P drifted higher. The equal weight made another lower high, these multiple point divergences. It dropped into negative territory with momentum and remains in negative territory. So again, some warning signs here with the equal weight, I think. I think it's going to join Bitcoin, and again, it looks like Bitcoin, what Bitcoin has done. I think it's just right behind Bitcoin, and the S&P is going to start following Bitcoin off of the highs. But again, S&P will probably move back to the low that was made, separating the two peaks. The equal weight will probably take them out as Bitcoin is doing. Same thing going on with the NASDAQ 100. It's moving higher on very, very light volume. You had some topping signals here. We saw momentum turn bearish, but it didn't change the trend signals. And now we're turning back up, forming a negative divergence with momentum. And on many indicators, we're talking about Bitcoin's forming this bullish divergence. The NASDAQ and S&P eventually play catch up to Bitcoin. NASDAQ come back towards the 17,000 area here and again possibly set up a head and shoulders pattern. Continue to point out my signals are bullish. Trend signals never change. Momentum flipped briefly, but back to bullish. We could see these divergences begin to play out.